That I know you, I think, agree with is that because we're in a bit of a news vacuum and we're not going to get PCE for a few more weeks, then earnings and the lagging nature of CPI means that you think 75 is likely next month.
I do. I don't think they're going to have enough information to take their foot off the pedal. Now that 75 has been established, I think they will look at the situation over the next 6 weeks and not learn enough about inflation, and certainly not see, in all likelihood, enough evidence that inflation is declining to not follow yesterday's move with another 75.
How do they incorporate any other incremental information they may get from the market itself? Oil prices, equity prices, credit spreads, financial conditions.
Well, certainly they're very interested in financial conditions, and that was emphasized by Chairman Powell yesterday. So they will take that on board, but the primary focus of the Committee of Monetary Policy is the real side of the economy. And I've often said that they probably will not react to market performance or market activities unless they see that it's really undermining their basic narrative.
I feel like the talk today, Dennis, is that the 2-year yield is a little bit lower, 10-year yield is a little bit higher. So you're seeing flattening, and there are increasing concerns about recession and the fact that it's harder to do a soft landing. So in that kind of environment where the Fed has very much followed the market signals, why would the Fed do another 75? Why wouldn't they go down to 50? Because the data, and they are data dependent, is showing that the economy is starting to slow.
Well, if you recall from the press conference yesterday, Chairman Powell said, and I thought this was extremely helpful, they are looking for a series of month-over-month inflation readings that convince them that they're making progress in bringing inflation down. Between now and July, they're not going to have a series. By the September meeting, they will have 3 reports, because the interval between the July meeting and the September meeting is longer than the normal interval between meetings. So they'll have a lot more information by September. They're front-loading the rate rises that they feel are necessary. It's clear they're headed to something like 325 to 350 as a range by year-end. And the consensus around that strikes me as pretty strong. I think the dots show that. So I just don't see why they would have reason to back off in July.
Well, if the economy is significantly weakening and inflation maybe starts to come down, I'm not sure how much they can really do on. Clearly, they can do a lot on demand, and that'll bring down inflation, but can't do anything about the war in Ukraine, and they can't boost energy production, and they can't boost food supply coming out of the breadbasket, and they can't fix supply chains. It just feels like there's a lot of stubborn inflation there that they can't fix.
Yeah, fair point. Very fair point. In other words, I've made that point before, that they have tools that can address demand, but this is an inflation that has multiple root causes, some of which are not really addressable by monetary policy. Nonetheless, the Fed appropriately has taken responsibility for bringing the inflation rate down and has to do what it can. And to some extent, that means they may have to use their tools more aggressively rather than, more incrementally in the coming months. And I think that's what we saw yesterday in the policy action.
Hey, finally, Dennis, people love to focus in on Atlanta Fed's GDP Now tracker. Back in the good times, it ran a little hot. Yesterday, that goose egg got a lot of eyebrows raised. What kind of color would you add to that number and this idea that we're looking at flat growth in the current quarter?
Yeah, I looked at it myself yesterday, and it's a head scratcher from my point of view. Everyone is saying, and I think retail sales to some extent show that we still have strong demand in the economy. The consumer's still spending. The underlying economy is pretty strong, all things considered. And yet we're in the 3rd month now of the 2nd quarter, and that's when GDP Now tends to be most accurate, because It's just an accumulation of data that adds up to a GDP figure. So it's a head scratcher for me. I'd have to go back and study it more carefully. It's not an infallible indicator, often misses on the inventory question, but it is a conundrum, I have to say.
Well, we're going to find out. It's telling power in the weeks to come. Dennis, appreciate it very much. Important day. Thanks for your time.
Thank you.